Welcome to Fynders Keepers, the vodcast powered by AssetFynd. Here, we talk with the people shaping the future of global financial asset recovery, from industry veterans to technology innovators. Each episode uncovers new insights, real-world challenges, and the emerging tools helping companies locate and recover billions in unclaimed financial assets worldwide. If it touches finance, data, or discovery, we're talking about it here. This is Fynders Keepers, where every conversation uncovers something worth finding. Well, today on Fynders Keepers, I am joined by two guests, which is a first. Peter and Rudy Quinn of Linking Assets. They are two of five Quinn brothers, part of a set of triplets, and they've built a business around helping people and organizations navigate the often overlooked world of unclaimed property. We've been calling them the Unclaimed Property Brothers, which is, of course, a small nod to the HGTV property brothers, Jonathan and Drew Scott. But instead of renovating houses, Peter and Rudy help uncover, validate, and recover financial assets that might otherwise remain out of sight. Today's episode covers what Linking Assets does specifically, how two brothers ended up in this industry together, and we will dig into how technology and human expertise work together to bring more trust and discipline to unclaimed property. Welcome, Peter and Rudy.
Thank you. Happy to be here.
Thank you so much for having us.
So, as I said, there are five Quinn brothers. Your mother must be a saint, but that's another conversation, including a set of triplets, which you are both part of. And only two of you ended up building a business in unclaimed property. Why the two of you, and how did this become your lane? Peter, let's start with you.
Yeah, great. So how the story started, our oldest brother, he's a wealth management advisor for a big bank. So back in 2014, 2015, he explained that one of his bigger clients, was in the world of unclaimed property and was looking to start up the business again. He has done this a couple times. So being a CPA at PwC at the time, he asked if I was interested in, starting it with him and kind of being the face of the company. So I first had to learn what unclaimed property was. Rudy joined me from a hedge fund about a year later in 2016 as, kind of a co-founder. And here we are about 12 years later. So obviously I said our oldest brother's in wealth management. We have another brother. He's a commodities trader. And then the other one's a professional engineer. So they've kind of given us this lane to pursue this industry a little bit.
And Rudy, what attracted you to it, and how was your onboarding? How did that work for you?
So again, as Peter mentioned, I was at a hedge fund up in Greenwich, Connecticut. It was an $8.5 billion fund. I was doing fund accounting, helping to price the portfolio every month end, assisting with the audit in the early parts of the year. They were working with me to try and get me involved on, the front side, as I had expressed an interest in. But, Pete gave me the call, and, at the time, late 20s, it was kind of a no-brainer to, jump both feet, right in and have the opportunity to, build and run a company with one of my triplet brothers. Again, it was a pretty easy decision for me. In terms of, the onboarding, again, I had to learn, just as Peter mentioned, what unclaimed property is. And 12 years later, I feel like I do now have a good understanding of it. But unless you're in the industry, like, you really don't have an idea of what it is or what it's about.
It's true. It's quite niche. I'm always surprised how people still don't know much of it. And I'm fairly new to the industry as well. But I guess, Rudy, also too, being that Peter was older than you, maybe did you feel a little bit that you had to say yes to him because he was your older brother?
At the time he was living in New York City, I was back in Westchester. I wasn't seeing him as often as I would like. So that was also another reason.
Now we see each other too much.
So there's too much. There is such thing as too much of a good thing.
No, we work great together. We do.
Now, for viewers who are new to this world, as you said, Rudy, a lot of people don't know about this. And can you explain exactly what Linking Assets does? So you guys have been in business 12 years.
Yeah, I'll take this one. So we specialize in a lot of areas of unclaimed property, but our two strongest areas are owner location services, and estate research and recovery services. So we really have clients on both sides of those. So on the owner location side, we help financial institutions, so banks, credit unions, insurance companies, locate account holders or members who they've lost contact with, right? That's just natural in the world. It's important for the financial institutions because after 3 to 5 years of dormancy, they're required by law to escheat or turn over the dormant accounts to the respective states in which there's been no owner activity. So we assist our clients there in locating these owners and reactivating the accounts so they can retain those assets and they don't have to send them to the states. Now, on the estate research and recovery side, through our estate care center, we focused on deceased individuals. So if any of those account holders I mentioned above had passed away, we'll come in and we'll help locate and recover the unclaimed funds unknown to if there's a beneficiary on the account, if it's the estate administrator or executor who's entitled to claim that account, if it's a charity, if it's a corporation. So it's really, we come in through our estate care center, find the rightful claimant, and help them claim those funds. I think I covered everything, right?
Yeah, yeah, and as you can imagine, when we started the company out, right, trying to go and get a bank or financial institution to sign on with you, it took a lot of time, right?
Right.
And so in that period to get to the point where we signed client 1, 2, 3, all the way to where we are now, we really gained a lot of expertise in terms of the post-sheet recovery. So those assets that had already been turned over to the states. And so, now we kind of operate and navigate both lanes simultaneously. But yes, our main focus is, assisting our clients with retaining those assets under management, and then, going above and beyond and assisting in, those deceased accounts where a lot of banks don't have the resources or know-how, to kind of go out and find these people. And again, that's where we specialize. So, we like operating in both the pre-sheet and post-sheet space.
Right. Both sides of the coin, which makes a lot of sense. They go hand in hand. So from, maybe Rudy, from your perspective, what is the difference between identifying a possible unclaimed asset and then actually getting the money back into the right hands?
Sure, that's a great question, and I'm sure we'll discuss how technology and AI kind of assist in that. But our claims always start with identifying an asset, right? We feel that's not necessarily the difficult part. States are making it easier to find assets that have been reported. I think currently 43 states use Kelmar's CAPS unclaimed property management system, so it's generally becoming uniform. For the most part, we don't perform outreach to living owners to offer our services. We just found it's difficult to convince somebody to pay you a percentage to recover an asset that's always been theirs that they just lost sight of.
Right.
So again, we specialize in the deceased space, handling all aspects of the claim. Often that involves opening an estate. As we've come to know and understand what the various courts require prior to approving the appointment of a fiduciary, we're able to assist the estate attorney in obtaining all the required documentation to help facilitate that process in the court. We've come across many unique scenarios that require hard research. I think, we had one particular claim. It ended up paying out over $400,000, but we had a proven address that the decedent was associated with. After he came back from World War II, his business there in Astoria, Queens, and I think he was there, through the 1960s. But we basically, did the research, put together a 37-page binder, and it was pretty undoubtedly, his asset. He was connected to the address, and we had a successful recovery there. But, to go back to the question, right? Like, identifying is the easy part. Actually recovering it sometimes takes, a little bit of finagling and getting your hands, dirty in the research to try to dig up, how that decedent was connected to the address, asset, et cetera.
Right. It's a lot more complex than people think. So, Peter, from your perspective, in the CEO chair, where do clients that hold these assets tend to underestimate the complexity of this process?
I think where we see the biggest complexity or issue is the way these assets are reported to the states once they're deemed reportable, right? And I think it comes one. I think that issue is there a co-owner on that account that's not named
Right.
when it goes to the state? What if there was a beneficiary on the account and they're not named when it's reported to the state? So how does that co-owner or beneficiary know to come forward to go claim that asset? Um, the estate can try and go claim it. Maybe they're successful and the co-owner or beneficiary gets overlooked. Or, maybe that information comes to light during the claims review process. And that
Right.
estate wasted a lot of time trying to go claim that money. So I think where a financial institution needs to leverage our expertise and solve this problem is beneficiary location. It's so important. When that original owner names a beneficiary, they're the rightful claimant. When that person dies, those funds should go to that beneficiary. And, oftentimes when someone names a beneficiary on an account, they might not know the address of that Benny. So they'll just put their own address or,
Right.
it's just the person's name and date of birth. Now, say if you're talking about a CD that renewed for decades and that person dies, well, that person's not going to be at that address 30 years later. So the bank's not
Right.
going to know how to find that Benny. Or if it's
Right.
just name and date of birth, the bank doesn't have the capabilities sometimes to go find that Benny. So that's where we
Right.
come in. That's where linking assets comes in and helps them avoid that problem, or helps the beneficiary or the rightful claimant know that they're entitled to those funds. And then, we assist with that whole claims recovery process.
Right. It certainly isn't straightforward. Lots of nuances there. And, Rudy, from the finance and client service perspective, where do you people usually get stuck when they're trying to reunite with their assets? Is it documentation? Is it trust, timing, jurisdiction, or something else?
Yeah, no, I think it's a combination of a lot of what you just mentioned, right? I think a lot of people sometimes just get fed up with the process. It's very much a waiting game if you don't know what you're doing. As we operate on a contingency fee basis, we're obviously focused on recovering the assets in the shortest amount of time possible. So as a result, we try and anticipate all documentation that will be required to satisfy the claim so that once we're ready to submit the recovery package, all it's really waiting on is a claims processor to put eyes on it and approve payment of the claim. So most states will review on a first in basis. So if you find an asset, you generate a claim, you put a death certificate on file, right? You're going to have to wait 4 to 6 weeks for that to even be reviewed. And then once it's reviewed, there's going to be more correspondence requesting, XYZ documentation. You take the time to go get that documentation, you put it on the claim. Now, again, it sits in a queue waiting to be reviewed. So it could be another 4 to 6 weeks. Then once you have everything in line, a lot of times, a lot of these states will have different levels of review and approval after the fact. And so just knowing how the process works, what the timing is, the logistics behind everything, when to call the various states at what time of the day, so you're not waiting on a long line just to speak to a claims processor or representative to get an answer on a claim. So again, there's in this industry, we found that our clients they value their time.
Right.
And so whatever the percentage is that we're offering our services at, it's akin to the, having a landscaper or a cleaning lady or, anything along those lines, right? Is, you're paying a small premium to allow yourself time to do other things. We had one particular claim. It was one individual who was able to claim on behalf of all three estates, right? The decedents were his mother and his two aunts. We tried to get in contact with him for over 5 years. He's a senior editor for a big financial publication, and so in our minds, right, the assets remain uncollected. We knew he probably wasn't pursuing on his own. He just didn't have the time. So we finally get in contact with him. We get everything we need, and we collected for all three estates. Well, all three estates totaled over $2 million. So there's so much money out there, and sometimes people just don't have the time. So linking assets, having the wherewithal and the know-how to go out and reduce this time from starting the claim to actually collecting, That's where we feel we offer a great, value added service.
It's really a win-win, right? It's a win-win. So I want to talk, Peter, a little bit about trust and where that comes into the process. So, people these days were naturally skeptical in general, and we have to be. And when somebody's telling them that, money might be waiting for them, it's kind of like this. I'm sure that the reaction is like, what are you talking about? This can't be true.
Yep.
So is that something you sort of run up against on a regular basis, and how do you sort of navigate that?
Every day, every day. I think
Okay.
that's the biggest obstacle for us is the trust. Is this a scam? We find that we send letters out to prospective clients, and this is on our estate care center side, and we find that we give enough information for them to call our office. And I think generally when we have a conversation with them and they see our understanding of the process and they see our knowledge of the claim at hand, I think that's the first time we build trust.
Right.
If it's a charity or a corporation, I tend to offer references. We've done great work for a lot of charities that and I ask them, can I use you as a reference in the future? And that seems to definitely build trust. We have individuals who always say, your service was great. I couldn't have done this without you. And they'll serve as a reference for us. So I feel we have certain things in place which, helps that process of building trust.
I love the idea of the references. I hadn't heard that prior from anybody else. And also I've been on your site, and you have some beautiful testimonials on there of people who have offered up their very positive experience with linking assets. So I think those are two great things to have in your back pocket in this world of skepticism. Um, Now, at AssetFynd, we think a lot about how modern technology can expand visibility, such as, searching across multiple jurisdictions, geographies, identifying and cleaning name variations, which there are many, monitoring records over time, and of course, with the goal of, identifying matches much, much, much faster. So, from your perspective, I'll ask you first, Rudy, where does technology make the biggest difference, and where does human expertise still matter most from your vantage point?
Yeah, no, it's a great question, and obviously technology, reduces the time to locate, as you mentioned, assets across jurisdictions, name changes, et cetera, right? So technology is great in terms of getting the information available to you to then decide how you want to move forward, right? So again, the space we operate in, where we're just working on deceased individuals, we're figuring out who the estate fiduciary is, if there's an estate filed, or if there's not, who's actually entitled to those funds. You know, Technology helps certainly with the research, especially if you know where to look, how to search, et cetera. But in terms of us, offering our services and getting somebody to sign on with us, you still need those interpersonal skills. We just talked about trust. People need to speak to people, right? They don't want, and they want to speak to people that, whose faces are on the website, who
Right.
are in the office, who they know are going to hold their hand through this claim and offer this white glove service, to take them from start to finish, so that if they're signing over, part of the recovery, or having to give PII, that information is secure, and that, again, like they, as Peter mentioned, when people call in and they speak to us on the phone, or I encourage anybody that is within a 30-mile radius of our office, or traveling to New York City soon, please come by.
Right.
We love to speak to people in person. Tell them all the assumptions that we've made, all the research that we've made, to lead us to actually reaching out to you, with conviction that there's an asset out there that you are entitled to in one form or another, and we'd love to, go out and get that for you. So again, like, technology is great, I think, in the beginning processes of the claim. I think in order to, take it from generating the claim to the finish line, you still need to, you know, utilize those interpersonal skills, get people to sign on and trust you, and then utilize technology to help you
And
along
I
the way.
think, and I could jump in, I think technology is so important for our financial institution clients. That's where I think it really comes into play. everything with AI. Our CRM and our client platforms, they're continually evolving now because we have to leverage AI for data analytics, for tracking, for everything that the financial institution cares about, automation, sharing files. So I think that's where technology comes in, and we continue to capitalize on our IT department and everything they're doing.
It makes a lot of sense. And I just wanted to say for our viewers, when you mentioned it, you're in New York City. So I appreciate the very authentic backdrop of the sirens and the police cars. And it's, I feel like we're really getting to the heart of the
Yes,
matter here. So
yes,
thanks for,
Yeah, but
you cued that in, right? You made sure
of
this was going to
course.
happen. So
Of course.
we appreciate it.
yeah, funny little story about that, right? I remember speaking to somebody back in 2016, 2017. I was a year or two in, still learning, what I was doing, how to speak to prospective clients, and some woman, told me she looked up our address and it looks like a rundown, business center. There was scaffolding outside because they were doing renovations on the building. I said, ma'am, we're right off Fifth Avenue. We're right near Grand Central. We're in Midtown. I'm not really sure I understand, where you're going with this. Please feel free to come in. I think she was in New Jersey. Never came in, but I just, people, if people want to be skeptical and remain skeptical,
Right.
they will. But it's our job to, explain again why we're reaching out, what we can do, and really sell that time value money aspect of we're going to recover this in 3 months. If you try to do it yourself or go elsewhere, it might take you 6 months. So we're really, again, a value added
And
service.
we cannot answer our phones on St. Patrick's Day. We've learned our lesson. We're right on Fifth Avenue, so that St. Patrick's Day parade, you can't even hear yourself think. So we've
Right,
learned
right.
that
Well,
lesson.
that's okay. That's all part of the fun. But yeah, you make some great points there, and one of the things I'd like to spend a little time on now is people love to hear about the real stories, right? The real stories of recovery, of course, without naming names. With 12 years of experience in this, I'm sure you've seen and heard almost everything. Were there any particular stories, either or both of you, that either touched you from an emotional perspective or really shocked you from the sheer volume or size of the recovery? Peter, maybe you
We knew
first.
this question was going to come up. We have too many, but we thought of a couple that we could definitely share.
Okay.
And Rudy has most of them. His memory is extremely good. We have this big one. I mean, it's been in the news. It was in the news 3 years ago. It's an $11 million estate. We linking assets and our partners overseas. We have great research partners overseas, located 120 heirs, a majority of whom were in Poland. So we represent all of them, and the estate's $11 million. It's been a lot of you can imagine the documentation we had to gather to prove their entitlement to the
Right.
funds, the work that goes in. It sticks out. It's one of our biggest ones, so I figured I'd have to mention it. And we're still fighting to this day to complete the estate and get the money in their hands. So that's definitely been a good one. But I'll let Rudy share some, and then maybe I'll jump in with a couple others.
Yeah, I mean, a recent one, we're waiting on a $62,000 check for, a woman that lives in Long Island. And she just told me this couldn't have come at a greater time because her and her husband are, have to put a new roof on and they didn't know where they were going to get the funds. And this is, a blessing for them. Another great case we settled it the middle of last year. It was 1.4 million.
Wow.
When we were speaking to, I in researching the decedent, he lived in New York and then ended up moving out to California in the last year or two of his life to live with his sister. And he passed away in California. So he was survived by just his sister, who ended up passing as well. And she had two nieces, or the decedent had two nieces and a nephew. So we signed them up. We got the estate opened in San Diego, California. We made the estate recovery. In speaking to our client, she indicated that she was aware of a retirement account from her uncle, where he worked in New York. She had contacted the company. They couldn't locate anything. So she always thought that there might be something out there, but didn't know where to look or how to go about, trying to locate it. And, the other funny thing is that when her uncle moved from New York to California, they didn't think he had any money. Their mother was taking care of him in the last year or two of his life. So here's somebody who passes away, and they had $1.4 million. I think he died in 98, so about 20 plus years after the fact. And it was just interesting to see, things like that where, I guess people just lost sight of it. And, kind of we dig it up after the fact, and, it was a great case for us. But, another case we had was our client was a former U.S. ambassador. We get a Christmas card from her every year, which is great. While the Queen was alive, I was told that the Queen of England was also on that Christmas card distribution list. Her mother had a pretty large estate. She died in 2004, and we ended up finding, over 8,000 shares of Pepsi stock that paid out at close to 1.5 million. So, again, like it just these cases are out there, and 12 years in, we're finding more and more. We kind of know what to pursue. A lot of our cases too, like we had to reopen estates for somebody who died in 1970, about 5 years ago, and just reading through the last will and testament, we pieced together who's still living, who's entitled. If somebody post-deceased, their estate's entitled. So, we reach out and offer our services to them. So we have the knowledge to figure out who's entitled. And then, we work again with the estate attorneys, and we know what documentation is required. So we really do assist in all aspects of the claim, not just locating and recovering, but also, with the court process, in terms of just let's try and get everything buttoned up so that, again, we focus on claiming the funds as quickly as we can for our clients.
Peter, did you have any additional stories to add?
Maybe a recent good one was it was these two sisters went into an orphanage when they were very young. I think they were 10 years old. And then I think they lost touch with each other. And one of the sisters died maybe 10 years ago, and the decedent had just passed. And we actually were able to connect the dots that they were in an orphanage, were separated very young at birth, young in age. And then we ended up finding a couple nieces and nephews, and that claim is going to be north of $8 million. So yeah, they're out there, the money's out there, and it's nice to do the research and find who's entitled. We're so good at finding those rightful claimants, as opposed to the states taking this money. We like to see it go into the rightful hands.
There's a real human interest side to this, and sort of, and I find it fascinating. I mean, everybody has to work for, it's obviously a for-profit business, but the other side to it is, again, like this amazing reunification that is happening with, it going back to the rightful owner. And it truly must be such a great feeling to know that you're getting to the end, and then you get the feedback, and it just must fuel what you're doing. And I would imagine, does that sort of also, affect the kinds of people that you attract to your company and to your business because of this kind of lovely side of the human interest side?
Yeah, it's definitely a feel-good business. We're always looking for people that want to come work with us, and I don't want to say make a difference, but yeah, like make a difference. Again, whether it's servicing our financial institution clients on the pre-sheet side, where we're helping them to retain those assets and get in contact with lost customers, to then also having all of these success stories on the back end of, you speak to people and they're like, I would have never been able to find this. I would have never been able to, go through the process of trying to collect it. So, it definitely, to go back to where Pete and I came from before we started linking assets, right? I was at a hedge fund. He was an accountant at PwC. So we obviously have finance and accounting backgrounds. And we've found that has lent lent very well to what we do in the unclaimed property
Right.
space in terms of, knowing the financials behind what's worth pursuing, or even having conversations with people about, how it got to this point, right? Like, or helping our financial institutions, understand that, or what we always try to say is that the acquisition cost of going out and getting a new customer, as opposed to, using a service like ours to do a better address search to try to connect with, a young 25 or 30-year-old who just lost sight of their account and are at the early stages in maybe their professional career, where, as a bank, you want to keep them as a customer
Right.
in order to, hopefully as they grow, their income, they're depositing more with your bank. So
Right.
there's just, a lot of different ways to kind of look at how we help, not only our clients who are banks, but also our clients who are individuals or heirs to an estate. Um, it's an industry that is not so much tied to the market, unless of course you're dealing with shares of stock, but everyone's always looking for money. And with inflation having been so high over the last couple of years, with mortgage rates and real estate where it was a year or two ago, we've done a lot of analyses, and a lot of people have changed addresses. A lot of people moved out of the state they were living in to a cheaper state. If they were younger, they moved back in with mom and dad.
Right.
So, we're finding that in the current, period of dormancy right now that our clients are going through, is there's just a lot more people who are no longer at the address of record. And so again, we feel like the service that we offer, to our financial institution clients is going above and beyond its best practice in the industry to try and, again, get in contact with these people.
Yeah, it makes sense. So, before we wrap up with a more sort of serious question, I want to have a little fun to get to know a little bit about the two of the three triplets. So, what would the other three brothers say about the two of you working together? Is there a little envy? Are they happy they're not part of it? Are they observing from afar? What do you think they'd say?
Definitely from the third triplet. There's definitely envy. No, it's all joking aside. They say, when can we get involved? No, they have great careers. They let us have this lane, and I think we're doing a great job together here.
Yeah, Peter's failing to mention that the third triplet's wife just joined us on May 1st.
Was that Joanna? Joanna Quinn?
Yes.
Correct, with us. But yeah, no, we are deliberate about where our office is right now. Just for, we have people who live all over, and traveling to Midtown is easy, as well as having, a good address in New York City, again, for that credibility factor of when we do outreach to people. But we live back in Westchester County, about 35 minutes, north of the city, and we always joke, if we do want to eventually move out of the city and go find an office space there, Tommy, as the professional engineer, can have a hand in building that
Right.
new office.
Right. Okay. So they might be folding in as the business grows. There might be some opportunity for them to come into play. So, of the two of you, who's the funny one? Is it Peter or
That's
Rudy? Who's
definitely
funny?
not Rudy. So by default, I'll
Yeah.
take it.
I'm a little more straight laced and serious, but that's fine. It's part of who I am.
Who's the messier one? Is there a messy one or no? Who's messier?
Well, as you can imagine, right, our two older brothers are not that much older. One is only 18 months older, the other 5.5 years older. So there's the five boys within 6 years, and we all have great penmanship. We were all making our school lunches when we were in the second and third
Testament
grade.
to our
We were
mother.
doing our
Like
own
you said,
laundry.
she's a saint. She is.
She was smart in terms of how she raised us, right? She was taking things off of her plate in order to, so our wives all like the fact that we are highly domesticated. We are, very clean individuals. So we're all pretty much the same in that regard.
Is there one of you that is more cautious than the other and sort of more reticent, and the other one is kind of like, let's just do this, let's go?
Most definitely. Peter is the one who will say, let's go. I like to, make a plan to make a plan. and make sure all the ducks in a row before approaching a certain opportunity. Whereas Peter's ready to jump right in, and we work
We
well.
balance
We
each other
kind of
out
balance
then.
each other
Yeah.
out. Yeah.
At least we're not both, let's go get it. So we need that
Right,
balance. We do.
right. The yin and yang, the
Yeah.
yin and
Yeah.
yang. In working together, is there something that both of you found out, discovered about each other that really surprised you?
Honestly, people always ask, do you guys fight? We don't. In 12 years, maybe we'll disagree with each other at points, but, honestly, it's been great working with each other, and we don't fight. We can't take vacation with each other, but maybe
Okay.
that's good. Maybe we need a little break from each other once in a while. But no,
Well,
it's
now it's
great.
getting interesting. There's got to be, just give me something here. There's got to be a pet peeve that each of you have with it. Is there a pet peeve that you just, nobody's perfect. There's got to be something.
I'll
But
let him
even with
answer
your,
first. I don't think I
okay,
have one.
Well, yeah. As the more serious one who likes to have their ducks in a row, a pet peeve of mine would be when he says, "Let's do it, let's go," as the initial reaction. So I'm always like, hold on, take a step back, let's think about this. And no, he's more the let's do it and we'll figure it out later type personality. But then that puts me to work in trying to figure out, how we can be ready for when that opportunity does strike. So again, it's a good
I
balance
think
there.
it's more just annoying is his memory. We could have worked on a case 10 years ago. He remembers the name of the case. He remembers the name of the heirs. He remembers how much money we claimed back on their behalf. So I would say, yeah, I wish I had that memory.
I guess you have to be careful what you say around Rudy because it's come back to you at some.
Yeah, definitely.
Very true.
Well, listen, final question is, to both of you, and I'll start with you, Rudy. What is the one thing you wish more people actually understood about unclaimed property?
Really, that it's not a one size fits all, right? Even when we're talking to people, right, you have to kind of adjust on the fly and apply um, certain situations to what is actually going on. Um, it's out there. It's states are trying to do a lot more outreach themselves. They're trying to do educational seminars. They're holding conferences. So the education is starting to get out there. But you know I wish more people would understand, or maybe some of the bigger banks, that we're working for these customers, and so it should be best practice to go above and beyond, and not just check a box and turn the asset over and then get ready for the next cycle when it comes around. It should really be, what can we do in this moment to reduce the amount that's going to get reported to the states, so that people aren't having to go find their money. They're proactively getting contacted, from the holder, saying this is about to be turned over. We'd really love if you, would just contact the institution, or sign this letter, and we'll keep the asset here. And then, that now prompts them to, okay, here's an asset that I lost sight of the last couple of years. Now I'll keep track of it. It's trending in that direction, but it in a way creates a lot of opportunity for us to offer our services, in these various lanes, and so that's what makes this industry fun for us, is not only those recovery success stories, but also assisting our clients and trying to keep those funds in the rightful hands.
Peter, any final
Yeah, I
words?
think it's more common than you think, unclaimed property. Whether it's a gift card or a bank account or a life insurance policy, people think they have their finances in order, or they think they know all the finances of their parents who may have passed away. The fact is, you don't. Me and Rudy joke. I work with him every day. I know everything about him. I've been with him forever. I don't know everything about his finances. So I joke, I'm going to sign your kids one day and help them go recover.
Keep it in
I
the
guess
Accounts
family.
that they
Make sure
don't
you keep
know
it
about.
in
Yeah.
the family.
So I think,
I guess I guess we know who he thinks is going to outlive the other.
so. Yeah, I think it's more common than you think, and there, more often than not, there is unclaimed property out there for individuals.
Right. Well said. Well, listen, Unclaimed Property Brothers, that concludes our session today. It has been an absolute pleasure talking to you both. I've really enjoyed getting to know two of the five Quinn brothers, hopefully maybe to get to know the others
Yeah.
as time goes on, and learning about linking assets. And I think, you're poised for even greater growth in the future. And, thank you for your time. And thank you to everybody who watched.
Thank you so much for having us.
Yeah, thank you.